Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have a strategy roundtable where we talk about current market conditions. Trade of the week, talk about banks, which sectors are leading the market, and answer any questions you may have about subscription or if you're planning to join our community. It will be great. My background, for those of you who are new, is in technology. I was executive CTO of several publicly traded companies. I started here in Chicago. Was their first employee, Options Express, broker dealer, worked for Groupon, consulting Groupon, MediaOcean, and several other fintech companies here in Chicago. Been doing this for over 20 years now. Started Tradespoon Yellow Tunnel close to 15 years ago. We have a team of financial engineers that are building models using neural networks and latest advances in AI. And between Keith and I, we're managing live trading room, and we're using these signals to trade. And before we get into the discussion, very important to read the disclosures, especially for those of you who are new, who haven't seen this before. Trading stock and options involve risk, not suitable for everyone. I encourage you to visit optionscreening.com to understand the risk and suitability associated with trading stock and options. I am not a financial advisor. I'm here to show you what I do in my own account, based on my own risk tolerance level for general education information purposes only. And you can read the disclosures. On the bottom, relationship between Tradespoon, Yellow Tunnel, and Avant-Garde Trading, the tools that I'm using throughout the presentation. All right, trading psychology is important. Before we get into trading psychology, let's look at the current market conditions. Let me close some of these screens. Open Yellow Tunnel. All right, so our main models run every day: aggressive power trader model and weekly power trader. These are the services. They have similar models that basically provide aggressive power trader provides signal every day. So you can look at the history and basically see which signals being generated every day. And it also gives you a model perspective on spiders. It shows that for the next 10 days, we could revisit potentially 730, 720. Right? We've been kind of gliding near the 50-day moving average. But in the next month or two, it does see potential to get to the 800 level, right? Whether it happens before September, October, or after, I guess time will tell. We are approaching kind of middle of Q3, right? July, August. July usually is a strong month, positive returns. August, September has been either neutral or to the downside. So I think the risk as we are going through the earnings season that potentially we could trade lower. The model shows you that the uptrend still stays. And if you look at the spiders, we are above 7,500. I mean, almost for 3 days, we're trading, trying to stay above 7,500. So for now, market is glued to 7,500. We do have earnings from Texas Instrument, Google, after the close tomorrow. And I think that will probably, between this week, I mean, maybe it'll spill over to the next week. We'll see if the bulls are going to try to break through the all-time highs, right, 7,600. Or if there's a negative surprise or negative reaction to the Google earnings and Intel earnings and Texas Instrument earnings, I think technology will probably break down. And this is where 7,300, I would basically say that's it makes sense. I think I would expect both outcomes, right? You could get to 730 if the earnings reaction is negative, or if it is positive, you know, we're going to have a strong rebound. Even though spiders didn't really go anywhere and volatility is kind of the same since May, right? It's been May, June, July, almost 3 months, 2.5 months, where the market is just trading sideways. But if you look beneath the surface, right, if you peel the onion and start looking at individual sectors, like software, you do see a lot of volatility, right? Below 200-day moving average, below 50-day moving average. Stock like Microsoft, semiconductors like Micron, you do have sharp pullbacks where you see drawdowns. Micron drawdown is what? 35%, right? So sharp drawdowns and pullback in individual sectors, AI sectors, and momentum stocks like I was looking at Deere, right, or General Electric. You do see even in industrials, you have a lot of volatility, offset by other sectors like healthcare, right? So kind of there was a sharp divergence between healthcare stocks and semiconductors, and now semiconductors, pull back 30%, and healthcare close to all-time highs. So the next move, it will be determined by the earnings and inflation, right? The issue with Middle East and escalation in Middle East, 10-year yield, we're almost at the peak of the conflict that we had close to May, right? So we have, again, 10-year yield is elevating, yield curve flattening, two years actually making new highs, with the fear higher for longer, the conflict will stay longer. The oil prices, crude oil is approaching 90. Brent is approaching 95, 100, and then gasoline futures are also above 50-day moving average. So higher for longer, that means inflation higher for longer. That means interest rates will probably, Fed will be forced to raise interest rates. And it will be hard for the companies that are raising billions of dollars, right? Like Amazon and Microsoft and Apple, they're raising billions of dollars to support AI, and the investment will not justify, right? Because it will be hard to refinance. I'm looking at the super microcomputer reaction, right, for earnings. And you can see sharp rally. Granted, it's oversold, but still sharp rally, 20-30% up. That's encouraging, right? This is we've seen earnings from Taiwan Semiconductor, kind of under pressure, right? 100-day moving average, so the reaction is negative, right? ASML, we had earnings from ASML. It's still an uptrend. Long term, it's still an uptrend, but you can see sharp pullback. So we'll see what the reaction to the Google earnings will be after the close today. Right, we're sitting right at the 100-day moving average. Next move is 320 or 300 versus potentially 380 or 400. Implied move on Google usually 5%, right? So maybe 20 points, right? So the stock could be revisiting July highs around 380. Or it could pull back to 320, 200-day moving average. Probably not going to just stay flat because it is extremely oversold, and a lot of people are bullish on Google. So that would be the unknown, right? And that's what I would prepare. I think the market will resolve to the upside. I'm going to stay bullish and optimistic. Value stocks are close to all-time high, trying to break out. We had record earnings from the JP Morgans of the world, right? JP Morgan had a strong earnings. Bank of America had strong earnings. Goldman Sachs, right? IPO, investment banking, all in strong uptrend. And industrials, banks continue to grind higher. So I think it will resolve to the upside. But again, the market could go higher, and then the next move, as we approach in end of August, could be lower, right? Because if the conflict in Middle East, there is no resolution to it, right? And if oil price is going to start approaching 120, 150 on crude oil, obviously, probably the Google earnings will not matter that much anyway. So that's the setup. QQQ vulnerable, right? If you watch Love Island, right? My kids are glued to Love Island, right? I don't know why I even watch that show, but my family loves it, and they talk about it a lot. But using some of the Love Island phrases, QQQ is vulnerable, right? It is vulnerable. It could be voted off the island very quickly. It's been below 50-day moving average, below 20-day moving average. It retested to the penny, June lows, right, and almost May lows. So if after Google earnings and Intel earnings, if bulls are unable to reclaim 50-day moving average and we break below this level, I would expect the imminent retest of 100-day moving average and 200-day moving average. So sharper pullback, and that's something that I would be prepared for, right? You can buy QQQ put spread, right? You can buy QQQ put spread. You can buy, I have an Amazon put spread. That would be the one way to hedge your portfolio, right? So QQQ did bounce back from 688, so 12.68, so almost 2.5–3% rebound. This is an opportunity to review your portfolio, and I would rebalance, right? When QQQ was down 2%, right? When the market was down, how much was it down? From the top, 8%, right? So if the QQQ is down 8% and your portfolio was down 16%, 20%, most likely you have too much exposure to high momentum, high beta stocks. That is the most common mistake, right? We turn on CNBC, we sign up for newsletters, and nobody wants to talk about, maybe Yellow Tunnel is the only one, but nobody wants to talk about Citigroup and Philip Morris and Deere, right? Everybody wants to talk about Micron and Bitcoin and SpaceX IPO, right? So most of the subscribers, the most common mistakes, you have all of your positions in the same bucket, right? And you can argue that GEV is an industrial, but if it's highly correlated to AI, right? If it's highly correlated to AI, you could then, whether you have Micron or you have GEV, even though they might not have anything in common, but their common correlation is that they are highly correlated to the perception of, how disruption of AI, right? In terms of how much debt you need to raise to support an AI and versus how much revenue and efficiency you can derive from the AI. Any questions so far? You guys are quiet today. Can you hear me? All right, so that's something I would keep an eye. I would revisit the portfolio. I would look at the drawdown. If I was down 16% when QQQ was at 685, this is my opportunity to raise cash, maybe buy a QQQ put spread, maybe trim my Amazon position, maybe trim my Google position, right? And see what the reaction to the earnings Super Bowl, right? This week and next week's our earnings Super Bowl, right? It's kind of a World Cup in soccer type of event. So I assume, especially during summer when liquidity is lower and people are playing golf and sitting on the beach, you will have, the volatility will pick up, right? That we could have sharp rebound and reclaiming 50-day moving average, or sharp pullback and testing 100-day moving average. Both outcomes are equal. I favor the uptrend because I think value stocks are trying to break out to the upside. Small caps are trying to break out to the upside. So there is definitely broadening of participation, but without the hyperscalers, without Amazon, Microsoft, Meta, there's only so far you can go, and you can already see it in QQQ. QQQ has been, it's getting tired. First was the software, right? The Oracles of the world kind of lost the participation. Now it's Microsoft and, now Microns of the world. So semiconductors and hyperscalers, have to react positively to the earnings. And so we'll know the answer in the next 2 weeks. So I propose to hedge. If you're looking for a trade idea, again, today, aggressive power trader, if you look at the aggressive power trader, runs every day, right? You can see the history. As I said, you can see, okay, what were the signals yesterday, right? Yesterday was IVZ, right? So some of the investment banking or some of the stocks. Transportation, JBHT, right? You can't really argue that we are trading in a recessionary type of environment when your transportation stocks are making new all-time highs, right? Or your railroads are making new all-time highs. So definitely a dispersion trade, right? If you type in the news and type in what is dispersion trade, right? You'll see everybody talks about it, basically saying that ETFs are more or less stable, volatility is stable, but behind the scenes, some stocks making all-time highs and some stocks making, testing 200-day or 100-day moving average. So you can find which stocks are going where. You can also type in AI analysis. NVIDIA has been a popular stock, right? Everybody wanted to trade NVIDIA, kind of hasn't gone anywhere. It has a difficult time getting, above 200-day moving average. Model actually positive. It thinks after the earnings, NVIDIA could be a $255 stock. So, okay, so you have a long-term trend. You can prepare for the earnings. You can be bullish. You can be bearish. You can buy put spread and buy stock, right, to hedge yourself. But you can analyze your most liquid stocks using AI analysis, or you can look at our current portfolio or option portfolio to see what the option prices are and what the stock prices are. And you can, instead of a stock, you can trade CVS, either weekly or monthly expiration. You have buy and sell zone, right? If CVS reaches 107, then that's probably, if you want to enter or exit the position, this is probably the buy level. And 112 is probably overbought, and this is your sell level for today, right? And you can see these tips, buy and sell zone, and then it shows you long-term trends. So that's aggressive power trader. If you want to see, if you don't trade every day, if you're not aggressive power trader, once a week, you want to, put a couple of trades a week or one trade a week or one trade a month, then it's a weekly power trader. This model runs every Sunday. You can see what the signals were every Sunday, right? What was that last week, right? Last week we had Bank of America, again, transportation stocks, some of the food and beverages stocks, restaurants, right? CMG pullback, but you can still, short-term still in uptrend, right? So you can look at the CMG, you can look at Bank of America, right? If you want to trade, Bank of America is doing well. And those are the signals that you can find in weekly power trader. So these are the signals with suggested entry and exit prices. I don't trade all of these signals, but I trade some of these signals. Then you would see them in orders and positions. TFC, right? So regional bank, I have a TFC spread. Right? So I'm bullish on regional banks. The caveat is obviously Middle East and interest rates. But so far, if you look at the regional bank, KRE, it's still in strong uptrend. It's gliding above 20-day moving average, making all-time highs. So I'm bullish on regional banks. I'm bullish on IWM. I'm bullish on banks in general, like JP Morgan and Citigroup. So that would be where you can see orders and positions. And you can watch the recordings, right? Live trading room. You can go to live trading room recordings every day. Keith and I managing live trading room, morning bell and closing bell. And I encourage you to watch these recordings. Right? I encourage you to watch these recordings. Any questions? Chuck, JT, Kevin, Lewis, Michael, Ron, Ronald. Type in any questions if you guys have. All right, so that's weekly power trader. If you actually want to see what I trade every day, then you would go to Dynamic Power Trader. Dynamic Power Trader consists of, this is my portfolio. I have Amazon, I have Citigroup, I have a Carrier. You can see all of the orders, right? So QQQ put spread, I'm trying to add to my QQQ, I initiate again QQQ put spread. I'm trying to close DRAM, right? Call spread. So it's a combination of both stock and option trades, right? If you look at Amazon, you would see that I'm trading both stock and option, right? So I have a stock position, but I also have a spread position. So put spread position. So this is where you can see all of my orders, all of my positions. You can enter your phone and receive SMS message. I encourage you, again, watch the trading room recordings. It will explain why I get into the trade, how to hedge the position if it goes against you. And you can ask live questions. If you can participate live, I encourage you to watch the recordings, right? A lot of your questions will be answered, and it's a great way to get kind of free education. You can try our services for 30 days. And if this works, something that you're interested in, you get free education, and you can continue. Or we do have 30 days money back guarantee. We're in the middle of our earnings season, so I'm going to do Google earnings today. We have a closing bell that starts in 20 minutes. You can participate live. We actually have a special. So if you want to get a discounted rate, I think for $97 for the next 3 months, so literally $30 a month, and you get 30 days money back guarantee. So for $97, you can try out Earnings Power Trader, see how I trade Google. These are usually options. I did Morgan Stanley last week. That worked out well. I did Pepsi. That did well. So this is opportunity for you to trade short-term trades where sometimes I'm long volatility, sometimes I'm short. Like this week, probably short volatility. Sell, put spread, sell call spread, collect the premium. You can make 20, 30, 40% return overnight. If you're long volatility and you're buying these out-of-the-money calls, maybe not in the current earnings season, but you can buy calls if you think Google is going to move more than 2 standard deviation to the upside. Buy calls, or vice versa, buy puts if to the downside. Then you can have 100, 200, 300 returns. So it's very aggressive. This is for short-term aggressive traders that like to trade earnings, and I encourage you to participate. Profit Accelerator is stock trades only. You get email every time I trade. You get SMS every time I trade to basically buy stocks. So these are the services. I encourage you to. I don't know why it's not doing that. Okay. I encourage you to sign up. Right. If you need help with the trading plan, or how much risk to take, how to keep a journal, I do encourage you to go to contact us. You can talk to our bot. So we finally have a phone. You can talk to our bot. You probably won't tell the difference whether it's a live bot or if it's a person. If you want a consultation, not a bot, but talk to Keith, our chief investment officer, and he's also a head coach, then it's 25 minutes. It's a free, right? You can schedule 20-minute free session, and he can help you with your trading plan, trading journal, and answer any of the questions you might have. So Chuck, I know you sell out of the money puts, right? Like a credit secured put. So credit put spread would be a credit put spread. If you like on earnings. So I would sell a put spread on earnings on Google. But for Amazon, I actually bought a put spread because I'm concerned about Amazon earnings or Google earnings, right? And I have stock, so I want to hedge myself, right? So I do have, should have somewhere a put spread. Yeah, so I do have 250, 240, 230 put spread in case Google and Amazon earnings not good enough for the market to continue going higher, right? And, if I'm wrong and Amazon actually hits a home run, great. I have a stock, I have Microsoft, I have a QQQ. Then, this is just the cost of doing business and insurance. All right, so contact us, schedule consultation with Keith. I'm going to drop that. A lot of people ask me about auto execute service. So we do have auto execute service, and we have marketing relationship with Avantgarde, so full disclosure. But if you're either looking for another account, so you can, I encourage you not to trade all of your strategies and all of the newsletters or all of the Bloomberg signals in one account, because then it's hard to tell which one works, which one doesn't. So here's the link, and you can see you can get, first of all, 65 cents a contract. A lot of companies charge you more than 65. They charge you $1.50 per contract. That adds up over a period of time. So that's one reason. The other reason is full letter of discretion capability. So if you're interested in to auto execute some of our signals, like earnings power trader or dynamic power trader, those weekly spread signals, then you could do that as well. So I'm going to drop that link here as well. All right, any questions? Thank you, Chuck. Anyone else? Chuck, JT, Ken, Kevin, Lewis, Michael, Ron, Ronald. Okay, so we talked about different services. So we can talk about latest positions. So I do like semiconductors. Obviously, they pull back, memory pull back sharply. But again, I don't think this is a 1999 moment, right? We had a 50% basically pullback, right? You can think about wave 1, 2, 3, 4. I still think there's a wave 5 coming, right? I still think going back, if you like Elliott waves, if you study them. Okay. But you know, you have wave 1, 2, and then 3, 4, and then wave 5, right? So that I think that is something that you could, I think can happen, right? So I do like semiconductors. I do like Google. We'll see how it's going to do. It is also oversold at a 100-day moving average, and I do like semiconductors. Banks, I do have Citibank, JP Morgan. I think banks are going to do well. You know, some of the industrials like Deere, I think, can continue to grind higher. Industrial banks, regional, right? Small caps. We have a small cap position. I think this is, I would put some money maybe into small banks, IWM, some to QQQ, I think is oversold, right? But again, cash is important. Right now, I'm close to probably 40% in cash, with the idea that if this level doesn't hold, and we do drop to 670 or 660, I want to buy. If we drop to 640, 630, I want to be able to buy, and I want to make sure my portfolio is not down more than 10%. So I encourage you to have only 4 active. If you're using these signals, especially if you're trading options or high beta stocks, only have 4 active positions at a time with maximum loss of 2.5% of account value per position. 30% in cash or 40% in cash. The rest of the 40, 50%, you can either buy ETF like value stocks. You know, they'll pay you dividend. They're still grinding higher and strong momentum. Okay, so maybe a Vanguard value ETF, right? If you want to be a little bit more aggressive, IWM, more volatile, but you know, also has been outperformed the market. But I would keep some ETFs or blue chip stocks. Maybe you want to, you know, you always want to have a JP Morgan, and you know, you don't mind that if it's down 10, 15%, you'll just buy more, fine. You know, but that would be kind of a barbell approach that I would propose. All right, any other questions? All right, so contact us, talk to Keith, consider opening an account with Avantgarde. Try any of our services. We do have Google earnings. It's still not too late. Click on go now, register. We'll go over this in the next hour. Right, it starts at 2 p.m. Chicago time, 3 p.m. Eastern time. We're going to talk about earnings, go through the Google earnings, and we'll see what happens tomorrow. All right, that's all I have for today. You guys are awesome. Thank you very much. Have a great day. Next week, sometime, we do have very good attendance. So I appreciate you guys coming out and joining. And we'll see you on Wednesday. Same time, 1 p.m. Chicago time or 2 p.m. Eastern, or I guess 11 a.m. on the West Coast. Thank you very much and have a great day.